Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 345 on October the 18th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Beyond Meat, Inc., Cleveland Cliffs, Inc., and Snap, Inc., and we discuss three new trades on Iris Energy, Riot Platforms, and the ARK Trust Innovation ETF. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets were up once again this week. You guessed it, we closed at all-time highs for the weekly close. The Dow Jones Industrial Average gained 412 points, closing at 43,275 points. The S&P 500 index picked up 49 points, ending the week at 5,864 points. And now it's time for the topic of the week. The topic of the week is thinking you know. Have you ever listened to someone speak about a subject they clearly didn't know about? They might even argue that they're right, but you know they're wrong. Then they go boldly and confidently in the wrong direction. Sometimes they do it out of spite or because they want to do it their own way. Other times, they just think it's easy and that they automatically know what to do. There's a difference between knowing how to do something and thinking that you know how to do something. There are plenty of areas in life where some knowledge will get you by. Maybe you just know enough to be able to make dinner, or you know just enough to be able to order your meal at a restaurant in another language. Well, knowing just enough doesn't mean that you're able to cook, and it certainly does not mean that you're fluent in another language. Likewise, knowing what an option is does not mean you truly understand options. If you're anything like me, you've worked too hard for your money to easily let it go. Once I started viewing money as capital, specifically for my trading, I started treating it a little differently. If you want to grow your capital, it's important to know the how and why of option trading. On the trading floor, we used to say that everybody learns and lessons aren't free. Truer words have never been spoken. If you listen to this podcast each week and you kind of understand what I'm talking about, do yourself a favor and check out the basic video that I created for people who listen to the show. It's on the video tab of the website and it's completely free to watch. Now, if you want to truly understand options at a deeper level, send me an email and we can discuss whether or not working with me makes sense. Sometimes it truly doesn't make sense for someone to work with me. Other times I've been flexible in my approach in order to make sure that people have access to the knowledge they need. It truly is my goal to help people understand options. All of my members who have worked with me will tell you that. I actually care whether or not you understand, not just that you can put a trade together. So whether you learn from me or decide on another path, do not simply think that you know options. Learn from an expert, put in the practice, and actually learn to master option trading. You'll be happy that you did. So that's it for today's topic of the week. Let's go ahead and dive into the review of last week's trades. And it's really interesting as we watch the S&P 500 and the Dow make new highs, right? All-time highs, record closes, all of this. Not every company is brought along. So let's see how the trades this past week did. We're going to start off with our covered call. We looked at Beyond Meat, Inc., symbol B as in Bravo, Y as in Yankee, N as in November, D as in Delta. At the time, the stock was trading for $6.61 per share. I looked at buying stock and selling the November 7 call at 59 cents. Hoping for a 14.83% return in 5 weeks. Well, shares of Beyond Meat lost 26 cents, ending the week at $6.35 per share. The call option that we sold lost 8 cents, leaving us with an 18-cent loss on the week if we were to close that trade out immediately. Now, we are still more than 30 cents, or that's about 5% above our break-even point. I am not looking to make any adjustments on this trade at the moment. If the price fell below the break-even price, I might consider rolling the strike lower. We could also turn the short call into a credit spread to separate it from that long stock from a risk standpoint, and then sell a closer to the money strike to collect even more premium overall. There are all sorts of other creative solutions we could take, but no need to just yet. With 4 weeks left before expiration, you'll definitely need to track the stock price and make sure that you have a game plan ready for whatever this stock price may hold in the next 4 weeks. Next up, we have the credit spread on Cleveland Cliffs, symbol C as in Charlie, L as in Lima, F as in Foxtrot. At the time, the stock was trading for $13.11 per share. I looked at selling the November 13-12 put spread at 38 cents. That could give us a maximum possible loss of 62 cents per spread. Well, shares of Cleveland Cliffs grew 79 cents, closing at $13.90 per share on Friday. The out-of-the-money put spread that we sold is still out of the money, and that's exactly what we hoped would happen. Our goal is for the stock to continue to rise over the next 4 weeks, leading to the spread we sold expiring worthless expiration. So that's the goal. That would allow us to keep the premium that we collected for selling that spread. And this trade is working out just as planned so far. So no adjustments are needed on this one as well. And then our final trade from last week was a debit spread on Snap Inc., symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. At the time, the stock was trading for $11.13 per share. I looked at buying the November 10-11 call spread for 55 cents. That could give us a maximum gain of 45 cents, or that's an 81.82% return in 5 weeks. Now, shares of Snap Inc. lost 64 cents, closing at $10.49 on Friday. The in-the-money call spread that we bought is now just at the money, and after 1 week, the trade has lost money and is currently below the break-even point by 6 cents. Now, you would be perfectly justified in making an adjustment. You could turn this into a long butterfly by selling the November 11-12 call spread. You could look to sell a higher strike call spread to collect more premium, lowering your overall risk as well on this trade. Now, I personally would lean towards waiting a little longer to get a better sense of how this stock might trade over the next 4 weeks. I don't want to make an early adjustment that just leads to a loss. So rather than letting that happen or allowing that to happen, I'm leaning towards letting this trade breathe a little bit and definitely keeping a close eye on it. But this is one of those places where it's important to just understand what all you can do with the options to alter this trade if need be, so that you can increase the probability of walking away with the profit, or at least limiting the loss. All right, so that's it for the trade review on this week's trades. Today, Friday, October the 18th, was expiration day for all monthly option positions in the month of October. All new trades on today's show and for the next few weeks will use the November 15th expiration for monthly positions in November. Now, with all of that being said, let's dive into the new trades for this week. We're going to start off with the covered call. I'm looking at Iris Energy, symbol I as in India, R as in Romeo, E as in Echo, N as in November. The stock ended the week at $9.35 per share. I'm looking at buying stock and selling the November 10 call at $1.15, hoping for a return of 17% in 4 weeks. Now, you enter this trade by buying stock for $9.35 per share and selling the November 10 call at $1.15. This trade makes the most money if stock prices finish above $10 per share. The break-even price on this trade is $8.38 per share. In real terms, the stock purchase will require $935, and you'll collect $115 for selling the option. Next up, we have a credit spread on Riot Platforms Inc., symbol R as in Romeo, I as in India, O as in Oscar, T as in Tango. The stock ended the week at $9.82 per share. I'm looking at selling the November 9-8 put spread at 34 cents, which could give us a maximum possible loss of 66 cents per spread. Now, you enter this trade by selling the November 9 put at 71 cents and concurrently buying the November 8 put for 37 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $9 per share. The break-even price on this trade is $8.66 per share. In real terms, you'll receive $34 per spread that you sell and have $66 at risk. And then our final trade on the week is going to be a debit spread. I'm looking at ARK Trust Innovation ETF, symbol A as in alpha, R as in Romeo, K as in kilo, K as in kilo. The stock ended the week at $48 per share. I'm looking at buying the November 47.48 call spread for 65 cents. That could give us a maximum gain of 35 cents, which would be a 53.85% return in 4 weeks. Now you enter this trade by buying the November 47 call for $2.51 and concurrently selling the November 48 call at $1.86. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $48 per share. The break-even price is $47.65 per share. In real terms, you'll pay $65 to enter this spread, and your maximum gain is $35 per spread. So that's it for this week's show. As always, thank you so much for listening. Thank you for sharing with your family and friends who also are interested in options. And given that a large percentage, a super large percentage of adults who are of working age actually have stock in the form of a 401k, I truly, down in the deepest part of my heart, believe that everyone should understand options. That's the reason behind that topic of the week this week. I think you should understand. So definitely check out some of my videos, or shoot me an email if you'd like to learn more about joining as a member so you could join the coaching group. But either way, I'm glad you listened to the show. I know one show after the next, you're going to pick something up if you keep listening. So thanks for listening. Shoot me an email if I've been a part of your option journey along the way and you haven't said hello yet. I'm always happy to hear from you. Have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.